Hey, I'm Dan Fitzpatrick here at StockMarketMentor.com, and it's Saturday, December 27th for this video. Look, Juno. Juno this? I didn't know that. Juno that? I didn't know that either. This is a stock that's like new IPO. You can see it. This is the trading history, and it's had a heck of a move. 25% from when it opened up. So how are you going to trade this stock? There's just not enough data to trade it responsibly. You can just buy it and hang on. I mean, for crying out loud, it went up 22% in a day on Friday. I mean, that's manna from heaven, which is odd on Christmas. But you look at this, if you go down to, say, the 15-minute chart on this, or really that's the 5-minute chart. We'll look at the 15. I mean, if you look at the 15-minute chart, suddenly the stock is kind of tradable. It's infinitely tradable. There's the squeeze over a day. You know, forget about what the daily chart looks like, and I would tell you right now, for the next several days or even weeks, you don't even need to look at the daily chart. There's not enough data there. Why do you want to look at it? What the heck are you going to get out of that? You're going to get nothing out of that. But you zoom in, say a 15-minute chart, you can see a breakout. Similarly here on the 26th. Okay, this was the opening move. Okay. The high of this period, 43.85. Okay, the stock didn't trade there for quite a while until ultimately, hey, it did. Then you get a nice big move. How many percent? Nice, because you set an alert. How are you going to get this type of information? Just trading a daily chart. I guess you could say, okay, the high here was 49.71, so I'll buy it 49.72. Okay, great. Wouldn't you rather be looking at a chart like this where you can watch this run up? The best technical setup for this chart right now, for the stock, would be for the stock to find some kind of settling out point, some kind of way for the stock to be trading sideways for a while, give you another volatility squeeze like this, and then you get the next breakout. Now, alternatively, this is like a really easy method. Okay, here's the 20-period moving average. It's the average over the last 25-minute bars. You could do something like this. Make this like a 10-period. How about a 5? Okay, even a 5-period moving average gives you a reference for where this stock is trading. It's trading at a really, really fast clip, moving up really nicely. So if you use, in this case, like a 5-period moving average, then when the stock, and ultimately it will, when the stock starts trading below this 5-period moving average, that's when you want to start exiting your long positions. It doesn't mean, and I've been saying 5 minutes, I meant 15, excuse me. When the stock starts trading below the 5-period moving average on a 15-minute chart, that's when you know that the stock's settling in. It's not to say that it's going to be a big pullback, but look, you're trading this thing, buy low, sell high. You think the stock's moving higher. So when it starts trading below a moving average that's been working, then you know that it's time to get out of that trade and start looking for another trade, perhaps on the same stock that's going to work. So anyway, I hope that helps. Members, we got 3 videos for you. Specifically, on the second one, we're looking at biotech and healthcare because I think there's some pretty interesting stuff there. And then the last one, just some stuff that I think it definitely need to be putting on your buy list. Also, I will be hosting a webinar in January for members to help people get set up for 2015. You know, I'm not the ultimate arbiter of what works and what doesn't in 2015, but I definitely have some opinions, and I'll be sharing those with members in January. So watch for your email. Gary will be sending out information on that. Okay, hope you have a good holiday season.